Good morning, people. Well, it's morning here anyway. It's 8 o'clock, and Aussie dollar was weak, and Swiss franc was strong. So first port of call was that currency pair. Aussie dollar was right at the top here at the start of my trading day, and then it's just a question really of analysing the the charts and working out whether it was a viable proposition. So I did take this short, and as you can see, you know, the daily chart is screaming potential shorts. Obviously we are in an uptrend, but we had this outside bar that broke through. So this is how we look at this. This is the penultimate bar, this is the ultimate bar. If the ultimate bar doesn't get broken, the high, it remains the ultimate bar, and it's used for the reversal. So low, high, forget about lower, low, higher, low, higher, high, it doesn't matter, but that's the song. Ultimately, you could have done it here, low, high, higher, low, higher, high, and then once the high of that's broken, you have to start again, low, high, higher, low, higher, high. But as I said before, you don't have to worry about the higher low. If you've got an engulfing or an outside bar, then that is the song in one bar, as it were. So we've broken the trend candlestick trend line support with a close. That's what's critical. This level wasn't broken, or it hadn't been closed below, because that's today's candle. Excuse me. But once it gave way via price, then obviously the only way you can trade is potentially down, and that's why I've drawn all these levels here. Massive bar like this is actually what we want to see, because there's nothing between here, this support, and this support here. So just double check the weekly and the monthly. I always do that. Monthly, massive candle, you can see a pullback on this massive downtrend. You can clearly see a downtrend going on here, connecting the highs to the lower highs, and then once this is broken, this becomes a valid connection point, so you can tighten it up, and so on and so forth. We could have put one on there, but that would really pertain to the daily chart, or the weekly chart in fact. So there's nothing we can draw on our charts regarding this one in regards of support and resistance for the downtrend, or down move anyway. Here we can draw, as I did, highs and lows of candles, because we want to know, obviously, you know, on a weekly chart it's going to look so different when you get down to your M5 and M1 chart. So just draw the levels on the high. The low, obviously the price is nowhere near that, so no need for that. Once again on the high here, as you can see, I've done it on the high there as well, because old support, old resistance rather, will be tested as new support. And then you need to do this one as well, and I should really have put that one in as well, the low of that candle. A little bit of an oversight there, but you know, the histogram, I can't stress this enough now, guys. The histogram is really important in my trading. The candlestick reversals obviously suggest trend reversals, as it did here: low, high, higher, low, higher, high, high, low, lower, high, lower, low, and close. And there's the pullback, and then ultimately it did continue on down. But I don't trade daily charts, I just use them for support and resistance. I just can't stand being in trades more than a few minutes at a time. So yep, dailies, draw all the levels. As you can see, I've done that here and here. Didn't put the low on there because the price was nowhere near it. The low didn't need to even go on that one because the price was nowhere near it, but I'll whack it on there just to show you. I'm not sure that even went on there then. Whoops, don't do this to me mouse. Oh yes, it did. It's behind the green line there, or dotted green line should I say. And then next door, as I say, not needed because the price is way up here. So do the same on H4. Anything that might affect the price, well, we can clearly see we've got a massive gap again to that H4 low. So this was just screaming shorts. This is just a demand area and or support area, call it what you want. Demand's good. It's useful to use that phrase, you know, because that's where people will want to start buying. The demand is there. It's got to be tested, because how do you know that this is fair value, that this area is the right price for Aussie dollar chuff, unless they come down and see whether there is more demand actually there, or whether it will just a lack of demand will mean the price will just collapse. Okay, so you have to remember the realities of what you're doing. You're not just trading candles. There's another engulfing outside bar reversal there again, exactly the same as the one on the I think it was the weekly or monthly. And let's get down to the meat and potatoes of this. This ascending trend line possibly could have been tightened up. Oh no, it's pretty close there. So price was coming back to that as well. One eye on the hist alerts all the time, checking that you're not trading against the higher time frames. Now this is after my trade. There's my trade down there. So as I say, H4 levels drawn. The only one that is going to affect the price really is this one here, this low here. Oops, that's the Billy TT bar alarm. 8 to 8:15 breakout. Not too worried about that at the moment. Yeah, so continue on down, checking all the reversals and confirmations. We could clearly see we'd confirmed down. We were down on the M30. We'd broken low, high, high, low, high, high. That candle there broke and closed below the low of there. H1 will naturally be in a descending trajectory. I can never say that word. Trajectory. And M15 confirmed. We were down, but really we started to turn green just on my trade, but M30 was the deciding factor. We just turned red and closed strongly below the previous. So you will sometimes get that discrepancy as long as the higher time frame agrees with you. Once again, we've got the close of the red histo alert bar. This is so powerful, you couldn't even consider going long unless you had some sort of break up like this and then a break over the 20 level on this 5-minute time frame. So, you know, if you can't go long, you must go short. Along with all the price action, the levels, we were below S1. I think S2 is somewhere below us, hiding down there. What's that? S2's down there, so a long way to go to S2 yet. Well within the average daily range, so no reason to consider going long at that point. And the volatility is in the market, the Frankfurt Open. So that's it, guys. Net 6 pips, which is more than I require this time of the morning, just over 6 pips. And there you go, another day, another trade. Thank you for watching. Have a good day.